Traders and investors, thank you for tuning in to Pre-Market Prep on this Thursday. It's February 6th, 2025. Guys, are going to talk about the idea that maybe we are losing some leadership here. We're going to look at the Mag 7 and what's been going on in those all-important stocks lately. Earnings-wise, today we got ARM and maybe some AI implications. Also got Qualcomm, Peloton, Ford, Under Armour, Yum. Probably not going to talk about Yum. Maybe not going to talk about Under Armour. Got some price action in Skyworks, SWKS. Earnings for tonight on the radar, Amazon, Affirm, Microchip, maybe a little Expedia. We do have a little bit of weekly jobs data today at 8:30 a.m. This is important because we're going to be getting the monthly jobs data tomorrow at 8:30 a.m. That Friday jobs data at 8:35 a.m. today. None other than Jim Tassoni. He's founder at Armor Wealth Strategies. Let's get over to, in just a second, take a look at price action in the markets. But first, folks, let's run that pre-market prep intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right. Good morning, gents. Good morning, everybody, ladies and gentlemen. Into green again here. Strong day yesterday. Knocking on the door, 6,100, up 12 3/4 handle. The buck up almost 50 cents here, finding support at the 50-day moving average, up 45 cents, 107.85. TLT, that's above the 50-day average. We'll talk about that. Pull it back a little bit. Big move yesterday, helping out a lot of stocks and sectors. USO flat right there. This 50-day moving average is like a magnet. The USO down, up 17 cents, 76.26. GLD, resting up here at all-time highs, flat 264.13. Silver down a tad, down 21 cents, 29.14. Bitcoin, easy number, up $1,290 at 99,000. All right, let's bring in Triple D and CF. And I will have to say, the pre-market show today, I mean, I follow the markets, and man, you guys gave me another education today. We got a lot of great stuff to follow. Good morning. Good morning. How you doing, Dennis?
Somewhat tired. Late Oilers game last night. They did pull it off in overtime, which was good, but I was up and then I couldn't fall asleep afterwards. So I'm somewhat tired. CF, how you doing?
Good morning. Also, nice win by the Rangers. Hey, if we're going to talk hockey, I got finally something positive. A nice shorthanded goal yesterday to beat the Bruins. So
it's been a rough year where the Rangers were expected, obviously, President's Trophy winners last year, expected high expectations, figured they were going to be contending for the Cup, and they're out of a playoff spot right now. So it's been a rough year for the Rangers. Maybe they can claw their way back into this playoff race. That would be, nice to see, because you never like seeing the Rangers out of it, the big names. But, I mean, it's been, an interesting year in hockey. Nashville Predators, too, for those fans out in Nashville, they were supposed to contend for the Cup, and they're right at the bottom of the league. So it's funny how it can change year to year, very
rotation.
Rotation. This is leading us into this conversation.
Well,
exactly. Look at the transition.
Dennis. Red Wings.
Yeah, they're coming back to McClellan, great coach. That was needed. They got the new coach, and they have changed. And I watched them against the Oilers. I mean, that Red Wing team looks good. Like, they look really good. So they're coming on. The Wings, are coming on here. But we better rotate away from the hockey talk, or we will lose our entire audience in the first 2 minutes, because there's a few people who like sports, but a lot of people do not. So let's rotate into the rotation of this market, because this market is all about rotation here right now. We were noticing it yesterday. We're noticing it this morning. When leaders to laggards, laggards to leaders. Let's talk about the loss of this leadership here, Christian, because we are seeing some of your leaders, just some of them. Microsoft not bouncing. Apple been very weak. One of its key part suppliers very weak here this morning too. So we'll talk about that. Amazon holding on. They report tonight. That's going to be interesting. Tesla's rolling over. Germany registrations down significantly yesterday. Tesla, shares starting to roll over here too. So we've lost a little, and then Google obviously reported. So we've lost some leadership here, Christian. What are your thoughts on what does this mean for the overall market?
Yeah, definitely. I mean, I like that phrase that we heard last week, lag 7. And the thing, if you look at what's going on with those names right now, and you would be like, oh my God, that's going to be really bad for the market. But other companies are kind of picking up the slack. Healthcare was very strong yesterday. There was more names that were going up versus going down yesterday. The other catalyst, I think number one, the catalyst has been earnings and some of the a little bit of well, I could just say it, disappointment by Google in terms of what they were looking for. But that's the one situation that you've got going on. And then you have this move in interest rates that we saw yesterday, which also caused a lot of movement. I really liked what healthcare stocks were doing yesterday. I've been a fan of medical devices, the IHI ETF, which has been breaking higher, and Boston Scientific had good earnings yesterday, and Abbott has had good earnings. ABT has been flying. I don't know if anybody's really been noticing that stock, but
Amgen up significantly yesterday. The A in my acronym from last year is having a pretty good year in 2025. I mean, we talked about this coming into 2025, that there could be a change, that often in January, you often see a change. It often reverts back, but it hasn't reverted back at all. Really, the laggards from last year have been your leaders this year, and your leaders from last year have been your laggards this year. There are some exceptions. There's always exceptions to the rule. But a stock like Amgen closed 2025 right near the lows. And then boom, we're up $50 from those lows here in the month. So, I mean, obviously the earnings report yesterday helped. But I mean, a lot of this too, maybe, Christian, this recent strength we're seeing in healthcare stocks, in some of the small cap names, could be attributed potentially to the TLT. Had a great day yesterday. We know, obviously, when the TLT is moving higher, it means long-term rates are moving lower. Do you think the TLT has bottomed, and does it start to get you excited that this rotation could stick?
I think definitely. I mean, it's taken the pressure off. Number one, I mean, that was the concern. If you go back to a couple of weeks ago, everybody was worried about the stronger dollar as well, and the dollar is up this morning. But the dollar has really shaken off that move with the tariffs, and it actually put in a lower high there in the dollar, and then interest rates have been moving back down. And again, we're talking about the long end of the curve, the long-term interest rates. So that has relieved the pressure on many stocks. I don't know in terms of if we're going to see further upside, but I think for now you kind of take it at face value, and the pressure is off. What everybody was talking about like 3 weeks ago, which is, oh my God, like interest rates are going higher and so forth. So I think that is spurring some of the rotation back into some of the unloved, and people are starting to look and say, hey, this group has been beaten up. Healthcare was, again, you go back a couple months ago, and healthcare, I didn't want to be in healthcare either, because it was really, getting beaten, has gotten beaten up, but it's made a nice turn back higher. So I think that you can begin to kind of look for things. And it's also the combination, to your point about Amgen. There's been some names that have been reporting some strong earnings, and we've got a couple more names out this morning. We got Eli Lilly and Bristol Myers.
Yeah,
right?
Before we go to those,
Yep.
I think the most interesting report, and this is just reeling us back into our original topic. How about Skyworks today, catching everyone's attention? I don't think the report wasn't that bad. I mean, $1.60 versus $1.57, slight beat on sales. Midpoint for the guidance, $2 billion buyback, but holy mackerel! I mean, this is an absolute disaster. Down $25. So let's take a look at 30%, 29%, and Apple is barely budging off it.
Yeah, and this is what's very interesting is this market is all about rotation and ETF effects. And the original sympathy moves that you would see, from 5 years ago simply don't exist today. Because if you had Skyworks down 29%, you would have saw Broadcom, ABGO, getting the beats. you would have saw, obviously Qualcomm reported, so it's already getting the beats on its own report, which we could get to in a second as well. But you would have saw those Apple Parts Supply Qorvo's down, QRVO. But you would have also saw Apple down significantly because 58% of their revenue, of Skyworks revenues, comes from Apple iPhones. So, I mean, when they're down significantly, it's got to make you concerned that, hey, maybe iPhone sales are not going that well. So, but the market just doesn't care to connect the dots. Like I'm not, maybe they're getting parts, from elsewhere. But when you look at the stats, still 58% of Skyworks revenue is iPhones. It's down 29%. Apple's down 77 cents or 0.3%. I think if you did this 5 years ago, I think Apple's down 3% on this, not 0.3%. But it's all just like rotation station. When they're buying something, they're selling something off. Apple's now been coupled as a staple and not even considering, its own business half the time. It rallies, when the market goes down sometimes. It's kind of crazy that you see Skyworks this week, yet Apple just ignores it. So I don't totally understand that. But, and people in the chat, they've lost some Apple business. But still, when I look at the stats, it says 58% of the revenue comes from iPhones. So whatever parts they're still supplying to Apple, maybe it's a matter of they lost so much business, and that's what it is. But I just, I'm surprised that Apple just shrugs this off.
Boy, I'll do the pre-market action here, and then we'll take a look. You are back at levels you haven't seen since early 2019, and just off the COVID lows. It looks like you have some interest here in the under 61 bucks. You've had several 15-minute lows between 60, 40, and 61 even. So the people that were trying to buy the weakness, I'm just going to throw a little bit out there, see if I can get hit. I'm going to throw a little bit. So that's what I'm seeing now. So I'll keep an eye on that level. 60 is a nice round number, but your rebound high is 62.43. But this is destruction here for SWKS.
I'm just looking, and we got people in the chat saying they've lost some business here. They've got another supplier, so which may be the case. So I'm just taking those stats from the internet. Maybe the internet's wrong, but that's what I was looking at here. I think they still supply significant. It says 58%. So maybe they've lost their own business and Apple's getting parts from elsewhere. But, you're looking here, they did $2 billion buyback, the revenue's light. The other consideration here too is that when you miss, there's no mercy. Like look at Roblox right now. It just reported the stock went out at an all-time high, RBLX, or dang close to it. No, not an all-time high because 2021. There's always, you got to go far enough back because the 2021 bubble is just insane. But I mean, here's one. I'm long it. It was a Pactor pick. It goes out at its 52-week highs into the report. They report. You would think that they must have just said the worst news possible. I mean, they did miss on revenue, 1.36 billion versus 1.37 billion, so maybe price for perfection. But holy crap. I mean, down 20%. These moves are just violent in some cases, like so violent. Christian, what are your thoughts here? I mean, here's a stock that looks like a CF stock, like going out at the highs, everything going well. It's been bought on every dip, and then just bam. If this isn't, a testament to the fade trade in 2025, I don't know what is. Because, I bought the stock at $52 in the long-term account. It goes out at 75. I'm up like 45%, and you give it all back in one day? I mean, this makes me not even want to invest. It makes me want to trade everything. Like, you look at this and you're like, why not take the profits? Because if you don't take them, they just eventually go up in smoke. That's what just happened to me on Roblox. What are your thoughts here?
Yeah, I mean, the stock had an amazing run up into this report, and to me, it was a head scratcher. I had been watching this the last couple weeks, and I wasn't in it, and I'm like, I don't really understand what the momentum is in this thing. But I mean, it was a huge breakout from $60 up to 76, and they came out with this report just a few minutes ago, and they say meets expectations. And when you've had a run up like that, you can't. There's so much built into the stock.
I want to interrupt you on that, though. Yeah. It's one thing to knock a stock off 5% because it has a high bar. It just gave back the entire last 3 months of it gave back in the entire run and more. I mean, are we at a point where the bar is high and then you just slightly miss that higher bar and you not only give back the entire run, but you give back more of it? Is this a 25? I'm not advocating to come in and buy it because this is just the kind of stuff that goes on. They go down 25%. Hell, they go down more. I mean, the moves here, the algorithmic, let's just talk algorithmic trading here just for a second here, because the algorithms are absolutely nuts. They're absolutely insane. The moves that they make on some stuff, like we know the earnings overshoots and undershoots, but you can make a serious argument that algorithmic trading has really messed with these markets. I mean, it's all algorithmic now, everything. And the moves are so quick and violent. Like RBLX, runs up for 3 months and gives it back in 3 seconds. I mean, that wouldn't have happened, Joel, back in the day. Moves like this just didn't occur, not to this speed. The speed is so crazy, and everybody knows that. So you don't make any markets. When the stock's reporting, everybody gets the hell out of the way and the book's empty. So the algo sees, just a slight miss on revenue, and they just hammer whatever bids they can hammer. And like now, we're bouncing a little bit. Where we got down like 50. What did we get down to here, Joel, on the Roblox?
We got down to in the 50 handle. We got down.
We're in the 50 handle still, so we got lower than that.
I meant under 51. 50.75, Dennis. 50.75.
I'm at a point where I almost want to, and talk me out of it. And Christian, I want to get your thoughts on this too, but I just want to finish my point. I'm at a point where I almost don't want to invest in stocks anymore. I just want to trade. My trading account outperforms my investing account every single year. It does. It seems to do it. There's a few years in there, maybe 2020 the exception, because everything was just going nuts in 2020 and the investment account was exploding. But, from my own perspective, my trading account seems to outperform my investing account almost every single year. And it's because I don't take chances in my trading account. I'm not holding Roblox through earnings. So here I am. I'm just making a point here. I bought Roblox at $52 on Pact. It was a great call. The stock goes to 75 2 months later. And you're like, it's looking good on the chart. So I hold it through because I'm kind of trying to be an investor here. You're trying to hold longer. And then bam, in 3 seconds, the algos take it all away. Bam, it's gone. It's like that South Park, and it's gone. That makes me not want to invest in stocks. Moves like this. What's that, Christian?
So let me ask you, when the difference between trading and investing that you're referring to, when you say invest, are you also making adjustments and trimming and so forth? Or
Always.
are you just outright long for investing?
Always outright long in investing. So I have 2 separate accounts. I have a long-term investing account where I just buy good companies at reasonable valuations. Then I have a trading account where I trade market neutral, meaning I have equal longs and equal shorts. If I'm long certain stocks, I'm long. I do some swing trading in there too, but mostly it's like day trades, short-term arbitrage type trades, but also calls on technicals and different things. But I mean, the long-term investing, my Tesla was all in my long-term account, Christian, even though I had some in the trading account too, right. And I made a lot of money trading it as well. But I have it in my long-term account. So I just adjusted. It's a great question because I just adjusted my Tesla. I sold a lot of my long-term Tesla. Because 1, I'm worried about crap like this happening, but more 2, I just don't know what Musk is going to say next, and it's hard to quantify. We can get into this conversation, but it's hard to quantify, how much damage he's done to, half of his buyers, because we know there's a lot of Democrats. I have friends in California who are Dems. They owned a Tesla, and they're like, we sold the Tesla. I'm like, why? Because I can't stand Musk. And I'm like, okay, well, that's not good news. And then you see Germany registrations down 59%. You see Canada aborting mission. You're like, nobody in Canada? Not nobody. There's obviously, conservatives in Canada as well. But I mean, there's a lot of people in Canada that are absolutely saying, like me and Laura were talking about buying Tesla. And now, at this point in time, with Trump attacking with the tariffs, no. So, I mean, how many other people are saying no? And Musk is getting, and it's, again, Musk isn't the one putting the tariffs on, but we know Musk definitely supported. So people are blaming Musk. I mean, you had Doug Ford tearing up the Starlink agreement in Ontario. I mean, he's pissed off a lot of people. There's a reason that CEOs don't talk politics, because they need all the buyers, not just half the buyers. So what I'm concerned is what has happened here, and I think this Tesla stock starting to show it, is that he's pissed off half of his buyers. I don't know what that means, but it doesn't mean good. So, but again, bringing it back back to the Roblox thing and stuff. I mean, when you get a little taste of bad news, the moves are so bloody violent. So I'm at a point here now where I'm just getting fed up with investing. And maybe this is, not the thing to do. Do you have a long-term investing account, Christian? Do you do any long-term investing, or it's all trading?
So I have I have what's called the TTD trend portfolio, where I hold less than 50 names. Right now I'm holding 48 names, and it's basically like it is investing, but it's investing unless. So I make adjustments every couple of weeks depending on if names are breaking down or if I'm seeing rotation in the tape. And earnings also dictates that as well. But, for something that I normally will hold names into earnings, unless they do, I wasn't long Roadblocks, but if I was, and Roadblocks ran up 30% into earnings or 25% into earnings, I would be trimming into that. And because again, it's too great of a move. And again,
but
I
if
don't know.
So Christian, I just want to interrupt you for a second.
Yep.
If you always trim into earnings, you're never going to hold a stock up 500 or 1,000%. Never.
No,
that's never going to happen.
I'll only trim if there's been a parabolic move like we saw with Roadblocks.
And was it parabolic? I mean, we can all say in hindsight, I sold my Roblox last week. Yeah, I'm a hero. But I mean, there was nothing technically, to say that this stock was going to get crushed for 30% here today. There was nothing on the charts that said this is just a terrible story. They got it wrong. They bought it into the earnings report. So the street absolutely got it wrong. If you believe in insider trading, it definitely didn't happen in RBLX. Because I don't think anybody had a tip off on this one. The stock went right out on its highs.
Straight up into the report.
But I mean, this is such a good conversation. It's important to continue it. So this is where I struggle as well, Christian. And this is why I'm starting to lean towards, trading everything. I would have trimmed it too. If this was in my trading portfolio and it was moving up, I would have did it. But I mean, I've done it in the past where I've trimmed into these earnings reports and then I don't get the stock back. I bought eBay during the financial crisis at $10. At $10. I trimmed it at 15 because I had a big run up. It's 60, and then I think it's even maybe split since then. I mean, it's hard to separate it, trading and investing. But I just wonder if we're in this environment where now it's like investing, honestly, kind of sucks. It sucks to be long Roblox. You have a fantastic winner in your portfolio and watch it go poof in 3 seconds. It pisses you off. And I know I'm not supposed to swear. Mitch says I'm going to get punished.
That's not really swearing. I don't consider that.
But it really upsets you. I'm more upset about Roblox than I am about AMD. Because I feel like I just got the rug pulled out from me under Roblox. Yet AMD, the writing was on the wall. So that's more my issue, where I was just refusing to believe that the market was right. But the Roblox really thought, the market thought that this was going to be a really good report. So, I mean, I definitely think there's a case to be made to go CF style and just trade it all and don't worry about making 1,000% on anything, because these 10, 20, 30% winners really add up over time, and then you don't get spanked. Maybe you should hold nothing through earnings. Maybe there's a case for that.
Dennis, I have one point. I want to make one point with it. Okay. Because I know you're trading very well, and we've had this discussion before. What you have in your long-term account, and I think you're talking about different time frames, I don't think that you could get the same results trading 2, 3, 4, 5 times the same size. I mean, because unless that's not what you're talking about. Because you trade in the after hours, you get huge moves on, sometimes you pick up very small shares, but you hold it for 15, 20 points. I mean, and you take risk with those small positions and they pay off. Are you going to do that, instead of 100 shares? Are you going to do that with 500 shares if you're trading bigger? I mean, I think it. I mean, I definitely see your point with the roadblocks and the long-term investing, but just think. I mean, let's say you were running, $20 million in the portfolio, non-margined or margined. I mean, would you be able to wiggle, like when you're getting smoked in something and you have a 4, 5, 600 share position? You got to work. You work your way out of it, man. You eat that loss. If you're traded double, triple the size, it's
You
gonna
work the
weigh
trades
on your
better when
psyche.
you're bigger, to be honest, because your fear is higher. So I think the point you're making, and it is a good point, is on my trading account I get much bigger for sure because I'm managing the risk so much better. I don't know, like if it's I think it's just it ticks you off when your stock's really doing well, and then boom,
Yep.
you see it down 25%. It's every day, Christian. It's every day we see a stock down 25 or 30%. There's two today.
That's true.
Got
But to your guy's point, and also was mentioned in the chat as well, it depends on the size. And you do have these I mean, this is event risk, and you can buy puts too. I mean, that's not a bad strategy. If you have an outside position and you do have an event that is coming up like earnings, then there's nothing wrong with putting on a hedge, protecting your gains if you don't want to trim. My strategy is like I would take a third off, and of course, if the stock to your and I completely understand what you guys are saying, what the chat is saying, because then you're kind of limiting your big winners. But I think when you take that third of a position off and then the stock runs up, it traps you out. But you still have 2/3 of the position on, and you're still earning money as it goes up. That's one way to do it, and the other way is just to protect your downside with puts.
I'll tell you, and actually I did trim Roblox a little bit on the way up, but I'll tell you, Christian, when you give it all back on 2/3 of the position, you're just as pissed off.
Sure.
It's not going to
Absolutely.
change like that. I took a third off. It's not going to make you feel any better. It's
Right.
just this market, the moves, the random moves, and it's not random with earnings. But I mean, you can go and buy puts on every single stock. So let's go Christian style, just like not Christian style, but just say your hypothetical situation. If you go and buy puts on every single stock going through earnings, I can guarantee you will not make money in the long run with that because you'll be paying way too much premium.
Agreed.
Way too much premium. So, I mean, I think the question that I was asking to you, Christian, and to Joel, is there a case to just say, screw it, let's just trade it all? Because I think, Christian, how's your trading account versus your long-term portfolio? Like you said, talk about it. How's the performance compare? My trading account does better.
My longer term portfolio did my trend portfolio actually did better. I did for the month of January.
No. Yep. Long term, like 10 years. 1 month, 10 years. Which does better? Trading or investing? 10 years. Because that's long term is long term. You have a down month in the markets. You're going to have, a week, obviously. If you have an up market, my investing portfolio always outperforms when the S&P kills it. So what about like the last 10 years, investing versus trading? Because this is a big conversation here. Should we be investors or should we be traders? If I'm sitting at my desk all day, maybe I should just be a trader. Well, how's that compare for you? Do you compare it?
I do. I like both. I mean, and it does depend on the environment. If we're in a situation like 2022, you're going to underperform in your investing account. There's no doubt about it. But I think over time, when you do look at a 10-year time frame, I think I'm okay with my investing. But did it outperform trading? Probably not with 2022. So I think it's funny where I'll go through set periods where they're kind of going hand in they're going hand in hand. When there's more intraday volatility and when the VIX is over 20, then typically my trading portfolio will outperform my investing portfolio.
Okay, so the stats here, and this is like a case for trading here, and I'm making a case here. Robert, MD, Robert, you're awesome. We love you. Says on average, traders will not beat S&P 500 with dividends reinvested. We have seen those stats, and I believe they are true, but there are definitely traders who consistently beat the S&P with dividends. I am one of those traders. I know my trading skills can beat the S&P. So at a certain point in time, if you have consistency behind you and you're consistently like you're trading, maybe it's just a board mission. Like I get it, that certain people, I get it, you got a day job. If people got a day job, they can't monitor the risk. But the people like me who are sitting at their desk all day, Christian, the people like you who are sitting at their desk all day, your trading skills are excellent. Maybe we just utilize it all farther, because I just, I'm at a point here. It's again, just, I've been analyzing this for a long time. And I'm like, well, why the hell do I invest at all when my trading account always outperforms my investing account? I could just take all my money from my investing account and just up my size of my trades a little bit, and then, and then just do it all together.
Strengths. Right. You do have to go to your strengths. If you're doing much better trading than investing, then you do what you do. If there's other people who can flip it around and do better on the invest, they're not good traders. They're better investors. They can't market time and so forth. So I think it depends on the individual person. You're an extremely good trader, and you continue to outperform and generate alpha. So in my opinion, you stick to what you're good at. Go to your strengths and avoid and reduce. If you're having a more difficult time investing, then you reduced your capital there. That's to me the logical thing, but it definitely depends on the individual person.
It definitely depends on the environment too, because I had a great year investing last year. We know I had Nvidia, I had Tesla, I had a lot of great stocks. I mean, I predicted this year though to be the year of chop and the year of fade, and now I'm complaining about it in my long-term portfolio because I see my trading account, I think I was up like 2.9% or something last month. I see my investing account scratch going nowhere for the month, or maybe it was slightly higher, but I mean, I had some stocks in there that I got hit on. I never looked at actually. So, but I feel like it didn't go up much if it went up at all. And S&Ps went up a bit too. Maybe I just had the wrong stocks. But I mean, there's been some hits here. And I'm like, if I just traded it all, I wouldn't get those hits because I don't typically take the stocks through the earnings reports because of the unknown. So again, just food for thought. There is this belief on the street that nobody can beat the S&P, that you as a trader should never market time, that you're taking so much more risk as a trader. I mean, CF and myself are proof that that's not the case. I think we can consistently beat the S&P as a trader as well because we're putting in the time, because we're here full time, because we've learned, about, the different
And you're
things.
going short the market too. That's the thing. And you're long.
Yeah, I know.
Yeah. I mean, that's the big thing too. You're going, I mean, maybe your returns, because I've seen you make some great short calls. I mean, yeah, I know, I think you still have some of your Tesla, but I know the other day, you made a day you were trying to dig out. I think that was like on Monday or whatever. You actually you have a good sized position and you shorted the stock on a day trade. You never short in your long term account. If you want to get better, and I that's hard to do, and there's different margin requirements and stuff. But that's simply because you're long only, and that might not, you wouldn't have been short roadblocks or something like that. But that's what long term investing is buy and hold. And as we can see in this kind of market, it could take something away. So maybe, I mean, you trade hedge in your day trading portfolio. Maybe if you hate something,
you don't want to hedge in your long-term portfolio because the market drifts up over the long run. So this is why I've went through, and I'm like, I've analyzed it from that perspective too. And you hedge everything. For the years that you get hit on, you make it up in the years that just slow and steady wins the race and it continues to climb. So I used to go short my long-term portfolio as well. I never go short in long-term. Even though I have a margin account, I stopped going short my long-term portfolio because the market does drift higher in the long run. And that's really what you're trying to capture, with long-term investing. You're trying to capture the drift higher and have some outperformance with them, get some good stock picks. With trading, it's completely different. You're in and out, day trading, trying to call, market falls and all that. So I know that everybody's getting frustrated with the rant, but I think it's important. I think it's important to sometimes have these conversations. Like, we're a news show, yes, but we're also an educational show here now. And I think it's important to have conversations. And, and maybe it's like, it's like Christian said, you got to find out who you are and, what works for you. I just know trading works a lot better for me. So I'm starting to lean to like, maybe I should just trade more and invest less.
I think it is time, folks, to bring on our guest for today. He is founder at Armor Wealth Strategies, Jim Tassoni. Let's go with that intro, and then we'll get Jim in here. There he is with his nice Spartan shirt on. Would you look at that, Joel? Joel's not even wearing his Michigan shirt. And there's Jim with his nice Spartan shirt. How you doing this morning, Jim?
I'm good. Yeah. So last time I was on, and probably most people didn't catch it, but right as I was heading off, Joel slipped in the "Go Blue" and then cut me off as the
I
host
did.
that you're right
I
to
did.
do.
I
But
did. And
so I
Jim,
not
figured I had to
surprised.
come back on this week and at least represent my Spartans a little
I
bit.
like it. I like it.
yeah, and Jim, I just want you to know I didn't sleep last Thursday night after doing that. I felt so bad about it, and I just want to say we got a basketball. We're not going to talk sports, but we're going to talk sports. We got a basketball showdown coming up here. You guys just lost two on the West Coast. We're have way too many turnovers, but Jim, you're the long-term investing guy. We just you. I saw you hop on early. Early, you were hearing about this. Boy, oh boy, it's a tough. It's tough. I mean, weighing in on the conversations, my long-term results are slow and steady. They're not knocking out of the park, and my shorter-term results are not nearly as maybe as I don't spend as much time with it and focused on it. But boy, oh boy, let's hear your opinion on that, and then tell us what you think about this market.
Yeah, so as far as that went, I thought it was a great discussion. I was actually really enjoying it. And I think what Dennis and Christian both highlighted was there are so many ways in the markets to make money. You don't have to necessarily be one or the other or both. You have to find what works for you. And a lot of that has to do with temperament too. Some people are good at being disciplined and staying the course long term and being able to see give backs and pullbacks and rises and falls. And other people like those quick hits of, I know I can get in, I can make that money, and I can get out. Now, me personally, Joel, I'm more like you. If I was to have to day trade or short-term trade the way Dennis and Christian do, I know my results would be nowhere near what those two guys are able to accomplish. I don't have the skill set and probably the temperament, to be completely honest, to do that. So
what's your time frame, Jim? Typical time frame?
Yeah, my typical time frame, it depends. I have my long-term portfolio like we all do, which is years. But then my trading portfolio and what I do for my clients are more in the neighborhood. Usually my trades are looking out 1 to 3 months on average is kind of my time frame. So I would say I'm a shorter term investor or longer term swing trader, I think is probably where I would categorize myself. So that just seems to be the area where I can identify good trades. I can stick with them. I can manage my positions. I can take some off as it moves in my favor and let the other, the remaining piece run. And then it skews the results in my favor because I get a lot wrong. If I looked at my results, I'm probably 50-50 at best, but my winners are so much larger than my losers. It works out over time. So
question. So 1 to 3 months, but so if you have a trade, so I would imagine like that's the initial like thought process. If you have a trade that you're like, boom, I really nailed it in this trade, it's working well. Do you say at the end of the 3 months, hey, I'm out of this position, or are you sticking with it?
No, it's definitely based on, I think when you get in a trade, the most important thing is whether you're an investor or a swing trader, a day trader, whatever it is I heard a friend of mine, actually, Matt Pax Kennott, said this to me, and it made a lot of sense. He said, know your second trade first. And I think all good traders know that. And that means know where you're wrong when you get into a trade. Whatever that means, know where you're wrong. But also on the upside, when a trade's working, I have levels that I know, okay, if I get here, I might, even if it happens, if I put on a trade and it's supposed to be a 3-month trade, but it moves a substantial amount in my favor in 2 days, I'm not going to take the whole trade off, but I'm definitely not opposed to taking a piece off and letting the remainder run. I mean, you're foolish not to book some profits when a trade works quickly in your favor. But with that being said, I'm never just going to say, oh, it's been, 1 month or it's been 3 months. That was my thesis. I'm out of this trade.
Yeah, I think it's also interesting too, the way that I look at it too, when I have an idea and I'm thinking, whatever the time frame could be, hey, I want to have this trade on for a bit. Like the price action will tell you if you're going the right way. If you immediately put on a trade and it starts heading south on you, what I've been trying to do as a trader too is be like, hey, that was wrong. Like I had an idea, but the price is not verifying that what you're doing was correct. So
Mhm.
I love it, like personally, and I'll ask Dennis too. Like, if you get into a trade and it immediately starts to work for you, you're number one, like yes, and number two, you're like, hey, it feels really good. You did your homework, you put in the time, and now the price is telling you like it's backing up what your thought process was and so forth. So. It's a big thing to get off on the right foot in trades too. And I've tried to kind of change my stance a little bit too, where if I get into some trades and, if I put on 2 or 3 trades during the day and I have one that is just, it's just not catching, I'm inclined to take that trade off and just start over.
Mhm. Absolutely. I couldn't agree more. I mean, at the end of the day, we systematize as much as we can. We have our processes, but I think what makes, whether it's you or Dennis or Joel or the other great traders out there, what makes a great trader is there is some element of art. There is some element of feel to trading. And that's where the greatest traders are. There's no, unless you're Jim Simons or Renaissance or Citadel or one of these places, there's no automated trading strategy, in my opinion, that you can just put on that's going to print you money. And there's definitely not one that these guys out there selling them for $199. If there was a trading strategy that printed money and people were selling it for $200, A, they'd be morons, and B, you just got to think twice about that. Why would they do that? So I think the big thing about trading is feel. It's understanding the markets, understanding the context, and understanding where you are in a current environment when you put on a trade.
So what you feel for this market here?
Great segue, right? So
Yeah,
again,
you walked right into that one, Jim.
yeah. So I continue to be overall, I would say, cautiously bullish on the market. So I've got more cash than I normally do. I'm sitting on roughly about 25% cash in my investment portfolio that I trade for my advisor clients and investor clients. The reason for that is twofold. One, this is an asset allocation portfolio. Two, you guys know, and it's been a bit painful the last week or two, I am not a fan of longer duration bonds, long-term treasuries. Still not a fan. Still have a small short on. It's been painful. It's backed up in my face, but it's still definitely been a profitable trade from where we've put it on. With that being said, I can have 25% cash. I can earn almost 5% on that cash right now. It feels pretty good to have that buffer in my portfolio against some of this volatility. I continue to love the financial sector, which has done really well. We came on beginning of the year. I said that was my favorite sector, and it's performed really well. You guys talked about healthcare. I've been underweight healthcare. I have not owned much. I wish I've owned more because I think that's the best performing sector through the first month of the year. And that's been one of these reversion trades that you guys have been talking about so much. That's one I've gotten wrong, have not been long in there. And then as far as individual stocks go, my biggest position's Meta, and that scares the hell out of me, to be completely honest, because it never goes down. So, what
would make you sell it? What would I mean, it just got through the earnings cycle. The earnings were good. They went one of the few companies, okay, the whole AI fallout, the DeepSeek, it's one of the few companies that have spent a lot of money on AI, and it just it shrugged it off. I mean, do you have a target? Is it, so you don't get roadblocks in it? What would be,
I have been obviously trimming as we've had this, what is it, 13, 14 day run up in a row. I mean, my line in the sand right now for this stock, and it's a lot lower than this. And I know we tend to be, shorter term traders, but I'm going to be long this last piece. It's still, I had what I would call almost an irresponsibly long position in this stock at one
That's
point.
a good thing.
it can be.
Why? Why?
I think there was twofold. One, the price action. I use one indicator that I like a lot for my time frame is I like a 90-day EMA, exponential moving average. And if you look at this chart on the 90-day, it is just ridden this 90-day EMA up. And now it's exploding away from it, but we've never really dipped below it. So I like that. I loved the price action in this stock, A. And then B, I thought that this was one of the stocks, like you said, that could be a beneficiary of this AI boom in a lot of ways that we weren't even thinking about. I think it makes the company more efficient. I think it allows them to rein in even more costs. Zuckerberg has done a great job at making the company more lean, making it more efficient. I still think it's going to be a go-to long-term from a fundamental standpoint, but even more importantly to me, because as Dennis talked about, at the end of the day, all of the fundamentals are baked into price. And so I'm a big believer that we've seen unbelievable price action in this stock. And as long as we continue to see it riding above those levels, it's still going to maintain a large position in my account.
This is the Mag 1 at this point instead of the Mag 7.
It's the only one left.
Well,
it's the only one that's continuing to hold on. Although NVIDIA is making a case and trying to come back. NVIDIA, it's again this whipsaw gem, this whipsaw action here, where stock makes a new low, and then bang, 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 right back up to the highs. I don't think I could have got the fade trade for the first month more right. I definitely didn't do well with the AMD and the Dell. But I tell you, this year has been the year of just take the money and run. Even to the Roblox thing, take the money and run. It's the kind of year that we're in here right now. Because if you don't, bang, they're gone. Those profits are gone. NVIDIA looks like, everybody's like, that's it. It's down to 113. It looks like it's over. And bang. 3 days later, it's back at 126 again. So it's just so much chop here. How do you navigate the chop?
Yeah, and for me, there's two ways, and I think Christian hit on it. And I think it's very difficult if you're trying to manage to a daily P&L. And if you're trying to do that, I think, whether it's your strategy or Christian's strategy, makes a lot more sense. If you have that mindset or that need to see a green screen at the end of the day, this is a very difficult market. And you talked about it. I own Meta, which is great. I also own NVIDIA, which has been, a roller coaster enough to make you throw up. And then I own Google. Those are three of my, top 10 holdings. And that, that's been painful lately. So, it's one of these markets that you got to be able to ride out the storms, whether it's, my short in TLT, which was great until it wasn't. I've got a long gold position on that's, from an asset allocation standpoint, it's the largest gold position I've ever owned. And that's been doing great, but I don't own any of the GDX, which is taking off now. So maybe I would have been better off going that direction. But for me, it comes down to just being able to sort of know that this is what happens in the markets. Markets will go up and markets will go down. But as long as your equity curve is still moving in the right direction, for me, that's how I feed my family. And the knowing that sometimes I'm going to see a red screen for a day, a week, maybe even a month at times. It's not fun. It's not easy, but you take the opportunities. Christian talked about if you've got a large position right now and you're worried about the markets and you think, again, I don't want to let my thoughts dictate my trading, but I think there's a high probability we could see a substantial pullback heading into the summer this year. I think conditions are setting up for that. How do you want to protect against it? For me, I own a position in a June 30 S&P put. And that allows me to sleep. I've got it at the 550 strike in the SPY, roughly 8 to 10%.
June 2030?
Again, want to have a steak dinner that we could see an 8 to 10%?
No, I'm just asking. No. I mean.
No. Yeah, I put that on.
2030.
4 years.
No, June of 2025.
Oh, I thought you said June 30.
June 30th. Sorry.
Okay.
June 30th.
Okay. No.
Yeah.
No. Okay.
Yeah, no,
Okay.
Sorry for that.
Okay.
What's that cost you, that protection?
It cost me a little over $7.
Yeah, so it's not much, but so far out of the money. I guess it's saying, you can stomach the 10% S&P fall, and I'll take that, but I don't want to take anything more than a 10% S&P fall.
Yeah, and that's it. I mean, I'm willing to give up, a small piece of premium, a small piece of my portfolio, to protect against, anything more than. And again, you got to remember the time frame here and the clientele I have. They're not looking to make money every day. These are investors that are looking to fund a retirement or endowment or things like that. So it's a different type of clientele, but they like the idea of the market's up here. There's a lot of uncertainty, geopolitically, even inside of the U.S. But and then I know we got to get going, but I will tell you, Dennis, one position that I'm looking at really closely here, and I'll leave you guys with this, and this is for you. And I understand there's a lot of risk around this, but I'm starting to really like the Canadian ETF, the EWC. I've been looking at that. It's interesting to me. I think the tariffs may have spooked people around this name, but I think if we come to some type of resolution, there could be some nice upside in that ETF. So keep an eye on that. I initiated a position in EWC. It's not a huge position, but I think there could be some upside there. With maybe some of my inflationary costs or calls, and some of the natural resource play that's embedded in that.
Yeah, I mean, it's lots of natural. Canada obviously is full of lumber, full of oil. So, you've got a lot of oil stocks in the EWC. You have a lot of Canadian banks in the EWC, just breaking down, what's in there. So, I mean, you're getting financials, your oil, you're getting like a value. It's more like, I would say that Canada ETF is definitely more of a value, ETF, where there's a lot of, names with lower PEs, a little bit higher dividends, as opposed to, some of these other growth names. You're not going to Canada for super high tech growth.
No. And you could even, and for me, you could, if you want to hedge that and you want to pair it, I'm bearish on the UK. I think their position in the geopolitical world right now and in the overall economy is much weaker than Canada. So if you're worried about the tariff, effect or hit on this ETF, maybe look at a pairs trade Canada versus the UK. Just something to think about, something I'm looking at. So I figured I'd put it on the traders' radar.
What's interesting too about this is Shopify is also in there too at about 7%. But to Dennis's point too, you've got a lot of banks in here. Royal Bank of Canada is the top weight, almost 8%. You also have Toronto Dominion, which is about 4.6%. You've got that Shopify in there, which is going to be reporting, which I think is going to be a very interesting earnings report. I kind of like this as a way to play Shopify with a little bit less risk. But then you also have CNQ in there. So I like this trade because you've got natural resources in there. You've got banks, which are doing very well right now. And you got a little bit of tech in there, and I like. Joel, if you could bring up the Shopify chart really quick.
Sure.
Because I think that's an interesting name. But I was going to ask Jim one last question too, as we're looking at that. Are you trimming? But the gold was a very great idea. So as much as you went over the bad news first with the bonds. You've had a really nice trade in gold. Are you trimming gold or are you sticking with it?
I still have in the history of my trading what I would consider, or what I think is, and I won't guarantee this, but the largest gold position that I've ever had. With that being said, I have trimmed a little bit on this run up, but I still own north of 10% of my investing portfolio in the GLD. So I still am very long it, still very exposed to it. I think it's a great hedge in this market. We've seen the dollar sell off, and it's kind of funny actually, that the strength of gold, I think, is hurting Bitcoin a little bit. We've seen, as gold continues to move higher, we've seen Bitcoin pull back a little bit. So are some traders rotating from digital gold into real gold? It may be something that might actually be happening.
Jim Tassoni, founder of Armor Wealth Strategies, joining us every Thursday on PreMarket Prep. Jim, glad to have you on, and we'll be chatting with you again next week.
Thanks, guys. Have a good one.
Thanks, Jim.
Okay, let's go. Do you want to do? Well, let's check roadblocks real quick, and
Let's bounce back a little bit here, but we already covered. There's so many other stocks we didn't cover. Qualcomm, Peloton's having a day. Eli Lilly's having an okay morning here, but it's giving it back. Let's go to Lilly to start here with, because I thought this. I actually had this in my head. I was like, I should short that Lilly pop. And then I never got back to it. I don't know how much it did pop. Can you see?
Let's see on this.
867 around the highs.
So when the story goes cold, I'm just going to say, a lot of my trading just involves, reactions and thinking it through. When the story is cold and the stock is out of favor, and honestly, the Lilly story has gone cold. There's a lot of overhead supply, and rips typically get sold. So we already, unfortunately, I never got back to it, but unfortunately, it's already happened. They've already given it back. So if you're looking and saying, why is Lilly down? Why, and again, I can give you the earnings report here too, but they've got decent earnings here. The stock's, guiding a little bit higher, $22 to $24, 5.32. It's like, this is good. Why would the stock be down? It has all to do with what has it done, and lately, and the technicals do tell a story. And the stock has just fallen out of favor. Think about how much CNBC was relentlessly talking Ozempic and relentlessly talking weight loss drugs. You don't see it much on there anymore. You don't see, they still talk it. They'll talk it today because Lilly reported, but it's not every day. The story has just gone cold. People, and they're saying it too. You give these needles and shots to yourself all the time. It hurts after a certain point in time. There's people that are giving it up. Now, I'm not saying it's done, but I'm saying the story has cooled off substantially and gone cold. So when you get a pop on earnings, it's not about what you've done for me. It's about where you're going. The guidance was fine, but I think we're just at a case here now where this, weight loss drug story has gone cold. So rips on these stocks probably still to be sold for the foreseeable future. I want your thoughts, Christian.
Yeah, I think Lilly is kind of we've covered Lilly before. I know that we've talked about this and the weight loss and so forth. And my horrible joke is that I'm long jumping jacks and push-ups rather than this. So I think to some extent this is played out, and I think that's why you're also seeing. I think that the weight loss theme has run its course and is mature. And I think that's also why you've got the pop in the stock and taking profits, because I just think that this story has gotten to the point where and again, they're still going to make plenty of money in this. It's not going away. And there's many medical benefits, I guess, diabetes and so forth. But in terms of everybody going out and injecting themselves because they want to lose a few pounds, few LBs, I think that story has kind of gotten mature, and that's fine. And, but yeah, I think that there's other places in healthcare to be.
That story's kind of worn thin.
And that's why the rips are getting sold on these names now. And this can apply to all stocks. When the story cools off, when the story, gets thin, whatever you want to say, with the pun there, I think you've got to reanalyze those stocks. And one, Lilly is not cheap. Still, you could say, oh, yeah, but it has it. But if they hit those targets, $22 to $24. You're still talking about a healthcare stock that is what, 35, 37, 38 times earnings when its peers are 10 and 11. So it's okay. When the story is hot, valuation doesn't matter at all. But when the story cools off, and that's what Christian was just talking about, the story being cooled off, valuation absolutely starts to matter. So people look at this, I'm paying 37 times earnings, and it looks like competition coming. People aren't loving it as much. A lot of reasons to maybe think that, it's not going to take off. Story drives price in 2025. It really does. And that's where you see Palantir's story relentlessly higher. People are so angry that Palantir continues to go higher, but the story is still hot. So when the story is still hot, it's going to continue. Valuation doesn't matter until the story goes cold. Maybe Palantir's story goes cold eventually. I think the Tesla story is going cold. But I mean, Lilly's story has definitely gone cold. So is it going to come back eventually? Maybe. But then you're betting. Right now, the smart money is taking profits in these names because the story's gone cold.
There's monthly like at 846, 847. I mean, top of the gap was 860. You're not going to see those levels, but let's just keep it simple. And I think until this thing gets above 850 and holds, boom. All right,
I think Lilly goes a lot lower today. I'll make a call here right now.
Okay.
I think there's a possibility that Lilly could see the low 800s today. That's a bold call. If I'm, wrong, it's Dennis, it didn't, but I mean, I'll make a bold call here right now. That's real bad action when you beat raise and it's down on the day. That means everybody got caught this morning. So you have day traders all caught long that thing too. I think there's a case to short Lilly here right now. No position. Maybe I'll take a position at the open.
I want to do two quick things because you were really focusing on ARM yesterday. You thought that was a big report. ARM is losing a leg here, but the market's still up. It's still part of
Joel's coming in hot.
Yeah,
you got the
still
puns today.
with the rotation here. I want to ask you about that. And then also, you were taking a nibbling at Amazon yesterday. I know that they're reporting today after the close. So let's finish up with the A's. The ARM report. Let's see if I have it handy here. How did they do? Let's see, 39 versus 34. Nice beat on sales. I don't know. Did they say something? Revised guidance. The guidance. Okay.
And you can't do that right now. You can't beat because they had a good quarter, but you can't come in right now in this environment and you can't say, hey, our guidance isn't going to be is what we thought, especially with the AI hype and so forth. Right, Dennis?
And the valuations where they're at. Yeah, exactly. So it's fallen off. You would think it would drag NVIDIA down with it, is not the case. Again, as much as Skyworks not affecting Apple, ARM not affecting NVIDIA, sympathy isn't just what it used to be. That's where we're at here right now. Is sympathy moves, unless it's like Home Depot lows, for GM to a certain extent. But sympathy moves just aren't as strong as they used to be. At least
ARM is still above. I mean, it did it it dipped below it in the after hours, but it's still above yesterday's low. It's still above yesterday's low at 162.50. It's $1.50 off that. So I think that's an important level to see if it even touches during the regular session. And Dennis, finish up with the Amazon here. Got hit with the Googster. Kind of bouncing back today. Earnings after the close. Is this going to be one where you're like, I should have trimmed in the earnings?
I'm not trimming any Amazon. And I'm not going to complain about it if it goes down either. I'll buy more. Roblox, different story. But I think we're at this point here. Amazon's world, man. I think that like I said, I think they're even figuring out streaming. They're figuring out so much. Betting against this company. This is your definition of if you want to invest in like 5 stocks. I've said this before. I think Amazon might even be number 1 for me. So if it dips, I hope it dips. I hope it goes down like 215. I'm going to buy more. I don't think it's gonna. I think they're going to beat. I think it's going to be making new highs. That's my opinion. I think Amazon's going to beat and raise.
All right, jobs number tomorrow. Me Schneider joining us at 8:35. Little bit of overtime here on pre-market prep. I hope you guys enjoyed the diverse conversation, and everyone have a good day. We'll back with you tomorrow morning.